All right, now here are three things you need to know right now. The U.S. jobs report for the month of April is out. The U.S. added 428,000 jobs in April, with the unemployment rate sitting at 3.6%. Let's bring in Yahoo Finance's Brian Cheung to dive into these numbers. Brian, harsh market reaction here in the pre-market. What does this report mean to what the Federal Reserve might do next?
Yeah, well, I mean, the Federal Reserve has already messaged that its intention is to continue to raise interest rates. Now, with regards to this report, it seemed like the biggest number was going to be wage growth. That's what they're paying attention to within the context of the immediate issue in front of the Fed, which is high inflation. 5.5% coming right in line with what the street had expected. That's likely going to give the Federal Reserve no reason to change their course of policy as laid out earlier in this week. If that number came in a little hotter, maybe that would have added a little bit more fuel to a Federal Reserve that would need to hike interest rates even further than they had already outlined. But again, I think that number coming in line is kind of thematic to the Fed continuing to raise interest rates, likely by 50 basis points in their next two meetings. I want to call attention just quickly to a few noticeable things in the report that have to do with the labor force level. And again, labor force is not necessarily people who are employed, right? It's the base of people that are employed but also looking for work. And what we saw between March and April was a noticeable decline in the number of people actively looking for work. So again, this is the total number, 164.4 million in March. That declined by 400,000 people to 164 million. So that raises the question, okay, if people are no longer looking for work, who's no longer looking for work? And the numbers in the report detail that most of them are men. So if you take a look by the gender breakout, we saw a contraction of 283,000 men actually leave the labor force over month, and women only about 80,000. So yes, a decline on that front, but it's mostly men. And it's also mostly people who are high school graduates that don't have a college degree. So take a look at this number, 36.8 million in March. That declined, 300,000 people no longer looking for work that are in this education strata, 36.5 million for the month of April. So this is a trend we have not seen in previous months. So very interesting to see. One interpretation of this might be there could be some settling happening in the labor market. People are deciding, I'm no longer going to search for a job, even though I've been kind of looking on the sidelines for the past few months. No longer looking right now. What's the reason? Kind of hard to guess right now, but a trend worth watching.
And it is, because when we think about some of the sectors, too, that this could impact most wholly, they're still off of the levels of pre-pandemic numbers that we had seen for leisure and hospitality. I've continued to dive into that throughout the morning. And considering that we are still, I believe, 1.8 million off of that level, there are still some areas in other sectors where we're not going to see it come back to those full pre-pandemic levels as well, especially if, to your point, they're not looking.
And this is the kind of agreement that we're seeing among labor market analysts that are saying people are leaving the labor market in a way that's going to permanently change the structure of the workforce. The reason for why I wanted to show you the numbers that I just showed you is that's the reason for why the unemployment rate didn't change. We had a lot of people get into the workforce, getting jobs between March and April, right? That's the reason for the over 400,000 job number that we got on the headline for this report. But the reason why the unemployment rate didn't tick down further as a result of that is because of the fact that we're seeing some change in the denominator of the unemployment rate as well. So again, the amount of people that are looking for work is very much a big factor in all of this. And it does tell you that there's going to be a larger percentage of the total population, regardless of what age, gender, race, ethnicity, that are just not going to be looking for work because of some of these demographic factors. Again, what's the reason for that? I don't know, but it's interesting to note it's mostly men, and it appears to also be people who are high school graduates but don't have a college degree.
I have a theory.
What's that?
Totally unscientific. There was one, when we were showing the sectors, I don't know if we can bring that up again, there was one bang in the middle that stood out to me that was unchanged.
Unchanged. Yep.
That's construction.
Construction. Yeah.
High school graduates and men.
Entirely possible.
So I don't know that would have accounted for the bulk of it, but considering if you look at the tea leaves in the housing market, look at something like Zillow today, which we're going to get into in just a moment. Look at some of the more choppy figures on the housing front. I mean, who knows? But that's just one potential contributor to that's an area that's slowing down.
And one thing with construction, we're hearing about this anecdotally with people that are either trying to build a house or trying to get the equipment or do projects on their current house. We know that supply chain issues with the materials may be a reason for why people aren't just getting signed up for jobs. Contractors aren't being hired for jobs, not because they're not available, but because there's no job to do because they can't source the materials. So if there's a supply chain issue behind that, maybe that explains the unchanged trend that we saw in that particular sector. But if it is something that's a little bit more secular than that, where it's people who previously had construction jobs that were laid off during the pandemic and decided to either switch careers or retire entirely, if you're maybe, let's say, 50 or 60 years old and you've already made your money, maybe you just cash out and move to Florida or something like that, right? I mean, again, it's not necessarily people who are, 20 years old just deciding I can just invest all my money into crypto and make money, right? That's not at all what I'm suggesting, but there are other trends that could be at play.
What's the definition of somebody having left the market?
Leaving the labor force.
Right. Is it just a month, or is it have to be a longer time?
So you are marginally attached to labor force. That's what they kind of, the BLS at least in their survey declines. If you're searching for a certain period of time, I believe it's 12 weeks. I have to look back into that for sure. But after a certain point in time, if you have marked on your survey, if the BLS calls you and says, hey, are you looking for a job? And you said, well, I have not actively looked for a job in, I think it's that 12-week period, then you are counted as someone who is no longer in the labor force. You are officially no longer counted in that statistic.
Brian, I want to go back to the Fed real quickly. That stunning decline that we saw in the markets yesterday, do you think that spooked the Fed and they have to walk something back in the next few weeks?
Well, I saw some interesting commentary over the last 24 hours that kind of suggested that maybe Powell got the messaging wrong. And it's not because of the 75 basis point commentary, but it's because what he was saying appeared to make some sort of dovish view from the Fed in terms of how the inflationary picture was going to develop, right? Because otherwise, why would you not want to take more aggressive action off the table? So Evercore ISI, for example, Krishna Guha over there suggested that investors quickly realize in truth that, quote, nothing has actually changed in terms of what may be required to cool an overheated economy, even though the Fed's tone appeared to change between Tuesday and then Wednesday. So again, I think history is going to bear out whether or not the Fed is going to be right on that front. But regardless, markets got mixed up because they were going into the 2 p.m. announcement, or rather the 2:30 press conference on Wednesday, expecting the Fed to be hawkish, and then for some reason they got it wrong. A little bit of a change. So,
Yahoo Finance's Brian Cheung. We're going to continue to watch to see how the markets digest this, plus with the added component of the Fed, of course, the perhaps overhanging and looming component of the Fed.
Always looming.
Always. Guys, thanks so much, Brian. Appreciate it.